Flash Boys, a Wall Street revolt written by Michael Lewis. Summarized by Detailed Book Summaries. Don't forget to subscribe, and if you are a returning subscriber, you are welcome. Chapter 1. The Flash Crash. Imagine pressing buy on a stock, confident in your decision, your research, your timing. It feels like control. But what if, in that blink of an eye between your click and the transaction, someone else had already seen your order, raced ahead of it, and bought the shares you wanted only to sell them back to you, a few cents more expensive? You wouldn't notice. You might just shrug at the price jump. But multiply that moment across millions of trades, and you get something deeply wrong. The question isn't just about money, it's about fairness. And that's what Brad Katsuyama was about to uncover, hidden in plain sight. Brad wasn't a Wall Street celebrity. He didn't wear power suits or chase the spotlight. He was a trader at the Royal Bank of Canada in New York, polite, disciplined, with a sharp sense of ethics. And in 2007, he started noticing something strange. He'd try to buy stock for a client. It would be available clear on the screen. But when he clicked to buy, the shares disappeared. Then, milliseconds later, they'd reappear at a higher price. It was like chasing a shadow. At first, it seemed like a glitch, but it kept happening. Different days, different stocks, same outcome. Something or someone was jumping in front of his trades, and it was costing his clients money. So he did what any honest trader would do. He asked questions. What was happening behind the scenes? Who was getting there first? To answer that, Brad and his team had to journey into the wiring of Wall Street itself. They discovered a market that had evolved far beyond what most people understood. Gone were the days of chaotic trading floors and paper slips. Now, algorithms ruled. Computers executed trades in microseconds. And the stock market was no longer one place. It was dozens. Public exchanges, private exchanges, secretive dark pools. Each with its own rules, its own speeds. In this new labyrinth, speed was king. And some players were moving faster than the rest. High-frequency trading had taken over. These firms weren't interested in long-term investments or business fundamentals. Their weapon was speed, and their goal was to exploit it. They paid millions to lay down fiber optic cables across the country, just to be closer to the stock exchanges. Every millisecond mattered. If they could see your order on one exchange, they could rush ahead of it to all the others, buy the stock first, and sell it back to you instantly at a profit. It was called front-running, and it was happening millions of times a day. Brad was stunned. The market was being gamed right under everyone's nose. But the bigger shock was this: nobody was stopping it. In fact, the very institutions that should have been protecting investors were profiting from it. Exchanges sold faster access to HFT firms. Brokers routed orders in ways that benefited themselves, not their clients. And the people getting hurt, everyday investors, pension funds, retirees, people who thought they were playing a fair game. It wasn't just a technical issue. It was moral, and Brad couldn't walk away from it. So he started building a team, not of traditional Wall Street players, but of outliers, technologists, market outsiders, even skeptics. People who didn't just want to profit, wanted to fix what was broken. Their mission: to create a new kind of stock exchange, one that leveled the playing field, one that delayed trades just long enough to eliminate the speed advantage, a place where fairness was designed into the system. It was a bold idea, a direct challenge to the status quo, and it would mean going up against the biggest firms in finance. But for Brad, there was no other choice. Because once you've seen how the system really works, you can't unsee it. You can't go back to pretending it's fine. Sometimes, the only way to fix a rigged game is to build a new one. Chapter 2: Brad's Problem. What do you do when you realize your job is built on an illusion? When you discover that your success, your confidence, even your certainty, are all being quietly undermined by something invisible, something no one talks about, but everyone benefits from. That's the question Brad Katsuyama found himself asking, not once, but every single day he sat down at his trading desk. Brad had always believed in the work he did. He traded stocks for big clients' pension funds, mutual funds, institutions, the kind of investors who needed fairness to function. He liked that his job meant helping people manage their futures. There was dignity in it. But around 2007, something started going wrong. He'd try to buy stock, and what should have been simple, see price, place order, get filled, turned into a vanishing act. The shares he saw would disappear the instant he clicked. Then they'd reappear, but slightly more expensive. Not enough to spark outrage, just enough to notice. At first, it seemed like coincidence, but it kept happening. So Brad dug deeper. He had questions no one else seemed to ask. Why did the market behave differently for him than it used to? What changed? Why did some of his trades succeed while others dissolved into nothing? As he looked more closely, a pattern emerged, one that didn't make sense. Or rather, one that made too much sense, in the worst way possible. Brad discovered that the market wasn't what it used to be. It had split apart. The New York Stock Exchange wasn't the only game in town anymore. Now, there were more than a dozen public exchanges and dozens of private trading pools hidden from view. Orders no longer went to one place. They were scattered across a fragmented digital landscape. The system had been re-engineered for complexity, and complexity had become the perfect cover for exploitation. The strange delays Brad was experiencing weren't random. They were the result of someone moving faster than him, someone who saw his order on one exchange and rushed ahead of him to all the others. The moment he tried to buy, they would buy first, raising the price before his order arrived. He was being front-run, not by humans, but by machines, not by error, but by design. That's when Ronan Ryan entered the story. Ronan didn't trade stocks. He didn't speak in financial jargon or carry himself like a banker. He was a telecom guy, someone who understood how information traveled across wires, how networks were built, and how milliseconds could change everything. Ronan had spent years building low-latency routes for big firms, laying fiber optic cables between New Jersey data centers and the Chicago Mercantile Exchange, all to save fractions of a second. When Brad explained his disappearing trades, Ronan didn't blink. He understood it instantly. The system wasn't broken. It was optimized for the wrong people. High-frequency traders, or HFTs, were using speed as a weapon. They paid tens of millions to wire up the market with their own high-speed infrastructure. They placed their computers inside exchange data centers. They measured the exact travel time between servers and exploited even the tiniest lags. It was like a rigged foot race where one runner was allowed to start a few steps ahead and no one was told. Ronan explained it like this: the market had become a race between traders who didn't care about the stocks themselves, only about being first. If they could see your order hit one exchange, they could front-run the rest. It was legal, it was profitable, and it was invisible to the average investor. That realization struck Brad hard, because it meant he'd been helping his clients lose money without knowing it. It meant his trades, executed with care, strategy, and intention, were being used against him. The game was wired against the slow, and slow was now anyone not spending tens of millions to be fast. But even more alarming was how few people seemed to care. Brokers, exchanges, even regulators, no one was asking questions. Some were actively profiting from the status quo. Stock exchanges made money selling faster access and premium data feeds. Brokers received kickbacks for routing orders through specific venues. The more Brad looked, the more it seemed like everyone had a hand in the deception. He couldn't unsee it. He couldn't pretend it wasn't happening. So he kept pulling on the thread. Quietly, strategically. He and Ronan started talking to investors, showing them how their trades were being sliced apart and exploited. The data didn't lie. Suddenly, people were listening. Clients began demanding answers. Questions that had once been brushed aside were now unavoidable. Still, Brad knew that exposing the problem wasn't enough. He couldn't just explain how the system was rigged. He needed to offer a solution. He and Ronan started sketching one out. What if you built a stock exchange that was fast enough to function, but slow enough to be fair? One where no trader could benefit from speed alone. One where all orders arrived at the same time. What if you eliminated the latency advantage entirely? It sounded simple, but it would mean challenging the very foundation of modern Wall Street. It would mean going up against the biggest banks, the largest exchanges, the wealthiest HFT firms. Brad wasn't trying to be a whistleblower. He wasn't trying to start a revolution. He was just trying to do the right thing. But in the world he lived in, that was enough to make him dangerous. Because once you ask the question, is this fair? And once you realize the answer is no, you can't keep playing the same game. You either leave the table or flip it over. And Brad had just started reaching for the edge. Chapter 3, Ronan's Problem. Ronan Ryan didn't look like a typical Wall Street player. He didn't talk like one either. But in a world where milliseconds could make you a millionaire, he was one of the few who truly understood how speed worked. Not the kind of speed that showed up in flashy graphs or financial reports, but the kind that traveled through glass fiber under miles of dirt between servers most people didn't even know existed. Ronan was a telecom expert. He knew how long it took for a signal to move from one data center to another, how a few extra feet of cable could cost you the edge, and how a single millisecond could mean a fortune gained or lost. When Brad Katsuyama first met him, it wasn't just luck. It was a collision of two worlds that were both staring at the same problem from different angles. Brad didn't need another trader. He needed someone who could help him solve a mystery. His trades were behaving strangely. He was seeing prices change before his orders could be filled, like the market was reading his mind and staying one step ahead. It was unsettling. Clients were losing money. His confidence in the market, the very system he'd spent years learning to trust, was starting to unravel. And no one around him had answers, except Ronan. Because when Brad explained what was happening, Ronan didn't see confusion. He saw latency. That was the key. The word no one in Brad's circle had truly understood. Latency, the delay between a signal being sent and received. In a market split across more than a dozen exchanges, where trades were routed electronically and filled in microseconds, latency was the silent killer. It was the invisible hand of disadvantage. And Ronan had spent years helping the fastest firms shave down those precious milliseconds, building the custom data routes and server placements that gave them the edge. Together, they began investigating. They mapped the geography of the market, literally. They tracked where each exchange's data center was located, how far it was from others, how long it took information to travel from one to the next. What they found was astonishing. Orders sent from Brad's desk to multiple exchanges didn't arrive all at once. Some got there faster, and high-frequency traders, armed with better cables, co-located servers, and customized algorithms, were watching those first hits and racing ahead to intercept the rest. It was front-running, not by traders in suits, but by machines that could beat you to the punch in less time than it took to blink. It wasn't illegal. It wasn't even hidden. It was just complicated, so complicated, in fact, that most people didn't even know it was happening. And those who did, they were getting paid to stay quiet. Brad and Ronan realized they were staring at a system that had been quietly re-engineered for the benefit of the few at the expense of the many. Stock exchanges were no longer just marketplaces. They had become profit centers for selling speed. They charged high-frequency trading firms for early access to market data, for premium order types that let them peek into the future, and for the right to place their servers physically closer to the action. A few feet closer could mean microseconds faster, and that meant winning. Even worse, brokers weren't routing trades based on best price or best outcome for the client. They were routing based on who paid them the most. It was called payment for order flow, a practice that allowed brokers to profit from selling access to their clients' trades. To most investors, it was invisible, but the impact was real. Every time a trade got front-run, it cost someone money, and those someones were often ordinary people, retirees, pensioners, teachers, workers trusting that the market was fair. Brad couldn't let it go. The deeper he and Ronan dug, the more corrupt the picture became, and the more clear it was that no one else was going to fix it. Regulators were years behind the technology. Institutions were profiting too much to care, and the public had no idea it was even happening. That left one option: build something new. Not a tweak, not a patch. A new exchange. One that eliminated the advantage of speed. One that protected investors from being preyed on. One that didn't allow latency to become a weapon. It sounded crazy, but it wasn't impossible. Before they could build it, though, they needed more information. They needed someone who had been inside the world of high-frequency trading. Someone who could explain not just how it worked, but how it thought. They needed a spy. And just when they began to wonder if that person existed, one showed up. Quiet. Brilliant. A coder who had helped build the machine, and who was now ready to tell them how to dismantle it. The war against unfair speed was about to shift gears. And Brad was no longer just a trader with a question. He was becoming a leader with a mission. Chapter 4: Tracking the Predators. Sometimes, the people who understand a system best are the ones who helped build it. And sometimes, those same people reach a point where they can no longer stomach what they've created. That's when things start to get interesting, when insiders become rebels. Sergei Alinikhov was one of those people. He didn't fit the typical mold of Wall Street. He wasn't driven by greed, ego, or the glamour of big money. He was a coder, quiet, methodical, brilliant. A Russian-born immigrant with a deep love for elegant solutions. Sergei worked not with money itself, but with the code that moved it faster than the eye could follow. He was hired by Goldman Sachs not to trade stocks, but to build the infrastructure that would allow others to do so at unimaginable speeds. Goldman had come to understand that in the age of high-frequency trading, the real power wasn't in strategy, it was in speed. And to get speed, you needed people like Sergei. In the bowels of Goldman Sachs, he helped build out high-frequency systems that sliced microseconds off trades, adjusted in real time, and made the firm untouchably fast. But Sergei didn't see this as manipulation. To him, it was problem-solving, engineering, precision. The game wasn't moral or immoral. It was math. But things began to change. The culture grew colder, greedier. The work shifted from architecture to arms race. It wasn't just about doing something well anymore. It was about doing it faster than everyone else, even if that meant weaponizing your own systems. Sergei felt the creep of something dark, something hollow, and when a smaller firm offered him a chance to work in a more open, collaborative space, he took it. He gave his notice. He cleaned up his work. Before leaving, he sent himself code that he believed was open source, reusable, shared. It was, to his mind, part of the collective digital commons, the same way coders often shared and recycled tools to build better systems. But Goldman Sachs didn't see it that way. To them, the code represented intellectual property, proprietary gold. It didn't matter that it wasn't top secret. It didn't matter that the same kind of code was accessible in 100 corners of the internet. What mattered was that Sergei had taken it. Worse, that he had left them behind and taken knowledge with him. So when Sergei stepped off a plane from Chicago one evening, federal agents were waiting. They arrested him on the spot. No warning, no quiet inquiry, just steel handcuffs and headlines. He was charged under laws designed for espionage, not code. And just like that, a quiet engineer who had never placed a single trade became a criminal in the eyes of the financial system. Brad Katsuyama watched this story unfold with disbelief. Sergey hadn't stolen money. He hadn't hurt investors. He hadn't front-run trades or gamed the system. He had simply walked away. And yet, the system moved to crush him. Brad saw the message clearly. The problem wasn't the theft, it was the exit. If you worked inside the black box of Wall Street's trading systems, you were expected to stay silent, even after you left. Knowledge was more dangerous than anything else. That realization hit Brad hard. Because if someone like Sergey, someone quiet, honest, brilliant, could be prosecuted for leaving, what chance did any reformer have? Still, there was something else in this story that stirred Brad. It was the kind of engineer Sergey was, the kind who understood the system down to the wire and bits. That was exactly what Brad needed, not another trader, but someone who knew how to build. If he was going to challenge the game, he'd have to build his own board. And to do that, he needed people who could construct a fairer exchange from scratch. So Brad began looking not for Wall Street veterans, but for engineers, coders, technologists, people who weren't seduced by trading, but who understood the physics of it. People like Sergey. And slowly, they began to emerge, quiet figures, idealistic, sharp. Some were disillusioned insiders. Others were outsiders looking for a meaningful challenge. Together, they began to form the foundation of something new. Sergey's story wasn't just a cautionary tale, it was a catalyst. It revealed the system's most closely guarded truth. It wasn't just flawed, it was protected. And the people it feared most weren't the ones shouting from podiums. They were the ones writing code in silence. Brad now knew the stakes. He wasn't just building a trading platform. He was taking on a structure that had been reinforced, layer by layer, to keep outsiders out and insiders rich. The only way to fight it was not to speed up, but to slow it all down. Not to compete on their terms, but to redefine the rules. Not to wait for permission, but to start constructing the alternative. And as strange as it seemed, the best way to do that wasn't through finance. It was through code, through architecture, through people like Sergey. Because if fairness was ever going to return to the market, it wouldn't arrive through regulation or protest. It would be built bit by bit, line by line, by those who once helped construct the machine and now knew exactly how to take it apart. Chapter 5, The Search. What if the very system you trust is designed not to serve you, but to outsmart you? That was the unsettling question haunting Brad Katsuyama and his growing team as they dove deeper into the underworld of modern finance. By this point in their journey, they had peeled back enough layers to see that Wall Street wasn't merely chaotic, it was engineered for confusion. And the deeper they looked, the more they realized the true enemy wasn't just high-frequency trading. It was the market structure itself. The stock market had become a fragmented maze of more than a dozen public exchanges and over 40 dark pools, private trading venues, invisible to most participants. In this vast, fractured network, time itself became a weapon. The difference between success and failure could come down to a few microseconds. It was a game of speed, of algorithms, and the fastest players were winning by default. But what truly stunned Brad's team was not just who was winning, but how they were winning. That's when they started to study something arcane, yet shockingly powerful: order types. To an average investor, placing a trade is simple. You click buy or sell. But in reality, these basic instructions were just the tip of the iceberg. Exchanges offered dozens of complex, often proprietary order types, arcane configurations known only to the high-frequency elite. Some orders could hide their presence. Others could skip the line. Some would only execute if they detected slower orders nearby. These were not random quirks. They were tactical weapons. And the exchanges were complicit. This revelation hit Brad and his team hard. The very institutions meant to provide fairness and transparency, like the New York Stock Exchange and NASDAQ, were selling custom order types to HFT firms. They profited by catering to the speed traders' needs, offering co-location services that let them park their servers directly next to the exchange's computers, shaving critical microseconds off trade times. These services weren't illegal, but they were deeply unfair. The exchanges had gone from neutral referees to greedy vendors, auctioning off speed and privilege to the highest bidder. Brad understood this wasn't a technology problem. It was a trust problem. The stock market, once a place where buyers met sellers in open competition, had been hollowed out and replaced with a high-speed battlefield where those with money and machines ruled over those with neither. This wasn't just about complex code or routing delays. It was about a moral shift, a bending of the financial system away from its intended purpose. That's when Brad had a transformative thought. If the market was fundamentally compromised, then the only real solution wasn't to reform it, it was to rebuild it. He and his team began to envision an entirely new kind of stock exchange. One where everyone's orders arrived at the same time, where complexity was stripped away, where trust was earned not through promises, but through transparency. The idea was simple, even elegant. Introduce a tiny delay, just 350 microseconds, into the exchange itself, not to slow it down arbitrarily, but to level the playing field. The fastest traders would no longer be able to outrun the others, because everyone's orders would be buffered just long enough to equalize speed. It was a radical concept, but to Brad and his team, it felt like justice. Still, there was danger ahead. Challenging the existing exchanges meant going up against Wall Street's most entrenched interests. Firms that had invested billions in custom infrastructure would not give up their edge without a fight. The system wouldn't just resist change, it would attack the changers. But Brad no longer felt fear. He felt clarity, because now he wasn't just reacting to a broken system, he was building a better one. And so the seeds of IEX, the investors' exchange, were planted, not as a protest, but as a working alternative. It would take time. It would take allies. but it would offer something the existing market had forgotten: a fair shot. This chapter was a turning point. No longer was the story about uncovering abuse. Now, it was about creating something new in the face of overwhelming odds. Brad and his team weren't just whistleblowers. They were architects of a new vision, one that dared to say that fairness should not be optional and speed should not be sold. They were no longer fighting the system. They were preparing to replace it. Chapter 6: Spread Networks. What do you do when you discover a system designed not to help the people it's supposed to serve, but to quietly exploit them? That was the dilemma that Brad Katsuyama faced. By now, he understood how deeply flawed the financial markets had become. He had uncovered the mechanics of speed manipulation and how complex order types favored high-frequency traders over ordinary investors. But knowing something is broken is one thing. Deciding to fix it, especially when the fix involves taking on the most powerful players in finance, is something else entirely. This chapter is where the narrative shifts from exposure to action. Brad began to envision an alternative, not just a patch for the system, but a completely new kind of stock exchange, one built from scratch, designed to be fair. That vision required more than knowledge. It required a team. So Brad set out to assemble a group of people, not only with technical skills and insider understanding, but also with integrity. They would be the people who, once they understood how the market had been rigged, couldn't look away or pretend they didn't see it. One of the first to fully commit was Ronan Ryan, the networking expert, who had already helped reveal how speed was being exploited. Ronan's grasp of fiber optics and physical market infrastructure had been pivotal in exposing the arms race behind trading. But now, he was no longer just the man with the map. He was ready to help build something better. Next came Rob Park, a quiet but brilliant technologist who had spent years optimizing complex financial systems for big firms. Rob wasn't flashy, but he was deeply principled. He understood how to design systems that could stand up to relentless scrutiny, and he believed in what Brad was trying to build. Then there was John Schwal, a former options trader and operations expert who had grown disillusioned with the backroom maneuvering in big banks. He brought not only trading knowledge, but also operational clarity. He knew how the gears of Wall Street turned, and he wasn't afraid to call out the broken ones. But perhaps most telling of all was Dan Azen, a coding prodigy in his 20s. Azen left a high-paying, comfortable job at RBC to join Brad's team, even before the idea of a new exchange had a name or funding. He didn't ask for a bonus. He didn't negotiate a package. He just joined because he believed in what they were doing. They formed a circle tight, determined, and values-driven. Internally, they became known as the Ring, a name that played on both irony and unity. While the traditional financial ring was about exclusion and privilege, this one was about transparency and trust. Each member brought unique skills, but they shared a common purpose: to rewrite the rules of the game for the benefit of the people who had long been left behind. As they gathered in a nondescript office space and began to brainstorm, code, and test, a vision started to take shape. The Investors Exchange, IEX. A stock exchange that would reject the market's obsession with speed as a weapon. A place that would operate with a small built-in delay, a 350 microsecond speed bump that would neutralize the advantage of the fastest traders without impairing regular market function. It was brilliant in its simplicity. With just a fraction of a second, they could wipe out the massive technological advantage that had distorted the markets. But it wasn't just about slowing things down. IEX would reject all the practices that had tilted the system toward the elite. No special order types for privileged clients. No co-location. No backroom deals. Every rule would be clear and fair. Every participant would play by the same standards. The team worked long hours, often late into the night, driven not by profit, but by principle. They weren't naive. They knew they were going up against the most powerful players on Wall Street, firms with deep pockets, armies of lawyers, and no intention of giving up their edge. But they believed that the market could be better, and more importantly, should be better. What united them was the simple idea that fairness wasn't a luxury. It was a necessity. In a system where the rules were written in invisible ink, they wanted to build a platform where nothing was hidden. A system that regular people, pension fund managers, teachers saving for retirement, small investors could trust. They didn't have flashy titles or legacy clout, but they had clarity. They had conviction, and they had each other. In this chapter, the ring wasn't just a group of people. It was a symbol of resistance, a quiet rebellion made up of engineers, coders, traders, and thinkers who had every reason to cash in and walk away, but didn't. Instead, they rolled up their sleeves and began building the future. Chapter 7, An Army of One. What happens when your quest for fairness in a corrupted system starts gaining traction, and those who profit from that corruption finally begin to take notice? That was the reality facing Brad Katsuyama and his small but fiercely principled team as they pushed forward with IEX. At first, they had been a whisper on Wall Street, a group of former insiders murmuring about fairness and transparency. But now, the volume was rising. IEX was becoming real. Their mission wasn't just theoretical anymore, it was operational. They were opening a platform that threatened to upend the very structure of how stocks were traded in America. And that meant enemies were watching. Brad and his team had launched IEX as an alternative trading system, or ATS, a kind of stock exchange light that didn't need full SEC approval, but could still handle trades. Their idea was simple, at least in theory. Introduce a speed bump that would neutralize the advantage of high-frequency traders and eliminate all the hidden traps buried in the order types used by other exchanges. But simple ideas are rarely welcomed in complex, lucrative systems, especially when those systems thrive on confusion. Once IEX started talking to potential clients, pension funds, hedge funds, asset managers, the emotional reactions started pouring in. Some were stunned. They had long suspected something was broken in the markets, but no one had ever put it into such plain, undeniable terms. Others were defensive. Accepting what IEX was saying meant acknowledging they had been complicit, if only through ignorance, in allowing the exploitation of their own investors. And then there were those who had profited from the rigged system, who now saw IEX as a direct threat to their business model. Brad wasn't a salesman by nature, but he found himself making pitch after pitch, walking into boardrooms, explaining the tricks of latency arbitrage and toxic order types to people who had been trading stocks for decades. He and his team had to break down, in painstaking detail, how front-running worked, not the illegal kind with insider information, but the legal, invisible kind powered by milliseconds and fiber optics. They showed how a firm trying to buy shares on multiple exchanges could be picked off by high-speed traders who saw the first part of the order and rushed ahead to buy the rest before the original order could arrive. It was daylight robbery at near-light speed. Some people got it right away. Others took time. A few never did. But gradually, the IEX message started to spread, and with that spread came resistance. Large broker-dealers began to feel threatened. High-frequency trading firms, many of which operated behind a veil of complexity, began to accuse IEX of being anti-technology. It was a false accusation. Brad and his team weren't against speed. They were against the abuse of speed. They weren't trying to make trading slower. They were trying to make it fairer. But on Wall Street, perception often matters more than reality. Other exchanges began mimicking IEX's language, suddenly talking about transparency and fairness, even as they continued to offer hidden perks and priority access to high-speed clients. It was a strategy of co-optation, adopt the rhetoric of reform while continuing the same practices. The deeper threat, however, was subtler. If IEX remained just an ATS, it could be boxed out, marginalized by the larger exchanges, restricted in scope, and eventually swallowed by the system it sought to change. If they really wanted to have an impact, Brad and his team knew they would have to go further. They would have to become a full-fledged exchange. That was a terrifying thought. Becoming an official stock exchange meant entering a battlefield of regulation, public scrutiny, and industry hostility. It meant subjecting every line of code, every decision, every structure to the Securities and Exchange Commission and an army of legal analysts. It meant going up against entrenched interests with deep pockets and powerful connections. But they also knew this. Real change doesn't happen in the shadows. If they wanted to change the market, they had to be the market. So they made the decision to apply for exchange status. They chose to take the fight public. They would not settle for being a niche player with a noble message. They would push to become the new standard. It wasn't bravado. It was necessity. Because as long as IEX remained on the fringe, the abuses they sought to fix would continue. But if IEX became the venue where trust was restored, where trades were not gamed, and where fairness reigned, they could shift the entire gravitational field of the U.S. equity market. This chapter isn't just about strategy or markets. It's about courage. It's about a small group of people deciding, with eyes wide open, to challenge the most powerful and entrenched institutions in finance. It's about choosing the hard road not because it's noble, but because it's right. As IEX prepared its exchange application and braced for the firestorm ahead, the team knew they were crossing a line. There would be no going back. But they also knew this: the truth was on their side. And sometimes, even on Wall Street, that still matters. Chapter 8, Ringing the Bell. When you step into a storm, knowing full well it's coming, there's a kind of calm that settles over you. That's where Brad Katsuyama and the IEX team found themselves as they entered the final stage of their long, defiant journey. They were no longer trying to whisper the truth into the ears of a few willing listeners. They were standing on rooftops, shouting it for all to hear. And Wall Street was finally forced to respond. This chapter isn't just a conclusion, it's a confrontation. It brings together everything the book has been building toward. The market was rigged. High-frequency traders had tilted the playing field. Exchanges had sold out their duty to be neutral marketplaces. And the people who were supposed to be protected, pensioners, teachers, ordinary investors, had been paying the price. Brad and his team had uncovered this truth. But now they had to do the hardest thing of all: tell it in public, in a way that couldn't be ignored. The opportunity came through Michael Lewis himself, the very author of this book. In a rare twist of narrative, Lewis steps into the frame. He wasn't just chronicling events, he had become a part of them. Brad Katsuyama and Ronan Ryan knew that to change the system, they couldn't rely on quiet backroom conversations or dense regulatory filings. They needed a story powerful enough to reach beyond finance, beyond Wall Street, into homes, headlines, and public consciousness. That story was Flash Boys. When Lewis published the book and appeared on 60 Minutes alongside Brad, the reaction was explosive. Suddenly, people who had never heard of high-frequency trading were asking hard questions. Senators, regulators, journalists, average Americans. They all wanted to know, how could the stock market be legal if it was being manipulated like this? The fallout was immediate. The next morning after 60 Minutes aired, phone lines lit up. Brokers were flooded with calls from clients demanding to know whether they were being front-run. Exchanges scrambled to defend their practices. High-frequency firms issued denials. But the truth had already escaped the cage. And that's where this story reveals its most unexpected twist. Because despite the backlash, despite the Wall Street noise, the market began to shift. Not all at once, not in dramatic, movie-worthy fashion, but subtly, institutionally. A few big asset managers moved their trades to IEX. Some began to demand transparency from their brokers. Others started to ask better questions about how orders were routed, who benefited, and why things were the way they were. Brad's team didn't suddenly become kings of the market. They didn't take over the exchanges, but they had done something maybe even more powerful. They'd forced a reckoning. They made it clear that trust, once broken, had to be earned. That fairness wasn't a luxury, it was a foundation. And for the first time in years, there was a legitimate alternative. Of course, Wall Street didn't roll over. They pushed back, quietly and aggressively. Some tried to paint IEX as naive or dangerous. Others tried to clone its features, offering watered-down versions of speed bumps or promising fair order types. But IEX wasn't a gimmick. It was a philosophy, one built not on speed, but on intention, not on deception, but on clarity. There's a quiet triumph in this final stretch of the book. It's not the Hollywood ending you might expect. Brad doesn't walk off into the sunset with a trophy in his hand. The market isn't magically fixed, but something changed. A shift occurred in the culture of finance. And that shift, subtle, principled, persistent, was perhaps the greatest victory of all. In the final scenes, we're left with a sense of unfinished business. IEX's journey isn't over. The battle for fairness isn't over. But Brad, Ronan, John, and the rest of the team proved something deeply important, that it's still possible to walk away from a broken system, speak truth to power, and build something better. Even in a world dominated by speed and profit, integrity still matters. And maybe, just maybe, that's how real revolutions begin. Thank you for watching. And if you have not yet subscribed, please do so. See you soon.